Your crypto gains just got wiped and the Fed hasn't even spoken yet. Bitcoin slipped below $66,000, while crude oil surged past $91 a barrel on this 11th night of war chaos. Wednesday, July 22, 2026. Like and subscribe for daily market updates. Today's agenda: market snapshot, the crypto dip, the gold twist, energy war risk, the Fed watch, tonight's watch list. Up next, the crypto dip. Let's look at the numbers before we guess where they go next. The S&P 500 sits flat near 7,509 points today. That 0% move feels weird because oil just spiked 3.15%, yet stocks didn't budge much. Why? Because investors are waiting for Tesla and Alphabet earnings tonight to tell them if tech can survive this energy shock. Nasdaq is down 0.33% at 25,749 points. Tech leads the market usually, but chip stock cooling means growth names get hit first when oil rises. Gold jumped 1.57% to $4,141. That looks like a rebound off lows rather than war panic, because it's still down on the month despite 10 days of conflict. Oil is up 3.15% at $87 per barrel, hitting its 2-month high after Trump threatened strikes on Iranian infrastructure. The dollar index barely moved, dropping just 0.03% to 100 and 1.14. Real yields rose 0.5 percentage point to 4.65% today. Here is the twist: gold bounced while stocks stalled because traders front-run rate changes before anyone admits them officially in public statements from central banks around the world. But gold is doing something different today that you need to understand immediately. Bitcoin just reclaimed $65,000, but profit-taking knocked it off its best levels in a month. It is trading at $65,713 today, down 1.2% from yesterday's high near $66,000. Why did this happen? Oil prices raced toward $91, and that spike knocks Bitcoin price off momentum, because traders rotate into safe places when energy costs eat retail margins everywhere from shipping lines to grocery stores. Even on the 11th night of war, crypto feels the reaction first before stocks do. Ethereum is down 0.26% at $1,924, while Solana dropped under $1 off its highs. This looks overdone to me, because the war premium is living entirely in crude now rather than spilling into other sectors like airlines or shipping yet, which means crypto might be getting punished too hard for oil moves that don't directly affect digital assets. I think Bitcoin holds 64,000 as support, while Ether pushes toward $2,000 resistance today. If either breaks, we could see larger move opposite direction within hours rather than days, given how fast unpredictable price swings these markets nowadays, without warning signals from Wall Street analysts everywhere around us all day long. That brings us to energy war risk. Here is the twist nobody expected. Gold finally bounced, but not for the reason you think about war panic. For 10 days of conflict, gold barely moved near $4,000 because investors were focused on immediate fiscal headlines rather than a safe place to store wealth flows. Then on Tuesday, it jumped almost 2% toward $4,100 as technical buyers stepped in to close a significant oversold gap. But that was merely a rebound off lows, not war panic, and gold is still down on the month, despite rising to $4,141 today, up 1.57%. The underlying supply fear just will not fade, because oil holds near $91 a barrel, up about 17% this month due to raising interest rates global inventories. The 11th night of strikes saw a fresh tanker hit near Hormuz, and a Houthi threat to Saudi Red Sea shipping are all keeping the supply fear alive, and prices high in commodities. Gold is acting like it's pricing in an oil crisis rather than just global political noise, because if crude goes higher, inflation stays sticky. This mirrors 1974, when energy shocks drove real rates negative. Today, central banks face a similar dilemma where they cannot cut rates without risking price stability, while yields remain elevated. I think we will see a repricing of expectations on gold by Friday if real yields stay this high, unless the dollar index breaks higher first. Don't expect panic selling just yet, because traders front-run rate changes before anyone admits them officially in public statements from central banks around the world, positioning portfolios for potential unpredictable price swings as available cash in the market conditions shift beneath the surface without immediate headline confirmation. With oil rising and tech earnings looming, here is what the Federal Reserve might do next. Crude oil is holding near $87 a barrel, up about 3.15% today and 17% this month. That matters because fuel costs eat into profit everywhere from shipping lines to grocery stores. Oil prices rise after Trump says Iran will pay for killing U.S. service members as the 11th night of strikes continues with threats on Saudi Red Sea shipping keeping supply fear alive. A fresh tanker hit near Hormuz adds pressure, while Brent crude touches 5-week high. Here's what analysts expect next for oil markets, which could push us toward $100 soon. This looks overdone to me, because the war premium is living entirely in crude, now rather than spilling into other sectors like airlines or shipping yet, though that should change quickly if prices breach $91. If Iran clears a path for selling in dollars tonight, when futures reopen unless they clear it first, that would shake airline stocks and retail margins overnight. I think crude could gap sharply higher tonight, when futures reopen unless Iran clears a path for selling in dollars. That would shake airline stocks and retail margins overnight, because fuel costs eat into profit everywhere from shipping lines to grocery stores. Finally, let's wrap up with what you need to watch tonight for earnings and oil. The Federal Reserve is poised to hold interest rates steady for now, even as inflation remains stubbornly elevated. However, economists warn that a rate hike becomes increasingly probable if oil prices surge toward $100 per barrel and the 10-year Treasury yield climbs another half percentage point today. Recent Fed commentary suggests central bank policy has become significantly cloudier, because as oil races toward $100, the Fed's next move gets cloudier. Stock market futures are sliding ahead of Alphabet and Tesla earnings reports, while chip stocks cool down as energy costs spike globally following Trump's threats to bomb Iranian infrastructure. This global political friction creates a severe dilemma for investors who previously assumed rates would stay low enough to fuel growth names like Nvidia or Apple when supply chains face new energy shocks. The Fed holds, but the gap between two rates between bond yields and inflation widens, because real yields have jumped half a percentage point today to 4.65%, effectively punishing long-duration assets. Historically, this dynamic mirrors 2013 taper tantrum, where rising rates triggered unpredictable price swings, just as growth stocks were most vulnerable to energy price swings. Consequently, we will likely see a repricing of expectations on gold by Friday, if real yields stay elevated, unless the dollar index breaks higher first. So don't expect panic selling just yet, unless that currency benchmark surges. Investors must now recalibrate their portfolios for an environment where cheap capital is no longer guaranteed, and energy security premiums are baked into every asset class, forcing a strategic rate change away from pure growth bets toward defensive positioning until clarity returns to the rate-setting process. Finally, let's turn to tonight's watch list. Tesla and Alphabet report earnings tonight, triggering immediate crypto unpredictable price swings as profit-taking knocks Bitcoin off its best monthly levels. The broader stock market mirrors this tension. Dow, the S&P 500, and Nasdaq futures slide today because tech giants face margin pressure from surging oil costs. Crude holds near $91 after 11 nights of conflict, while Trump threatens to bomb Iranian infrastructure, keeping supply fears alive and prices stuck at $87 per barrel. Gold finally bounced, but not due to war panic. It is merely rebounding off oversold lows following a sharp sell-off driven by inflation data rather than global political fear. I believe Bitcoin holds $64,000 as critical support, while Ether pushes toward $2,000 resistance today. If either breaks, we could see larger moves opposite direction, within hours rather than days, given how fast, unpredictable price swings these markets exhibit nowadays, without warning signals from Wall Street analysts everywhere around us all day long. This speed recalls the 2018 tech crash, where earnings misses caused instant available cash in the market evaporation before regulators intervened. Investors must now focus on second-order effects. If oil stays high, energy stocks may outperform, while growth names suffer valuation compression. The mechanism here is clear. Earnings uncertainty combined with supply shocks creates a fragile floor for risk assets. Investors are closely watching Tesla and Alphabet earnings tonight to determine if technology stocks can withstand rising energy costs, as oil prices hover near $91 per barrel amid ongoing global conflict fears, while Bitcoin dipped below $66,000 following Month of strong gains due to profit-taking, gold managed a technical rebound despite remaining down for the year. This move reflects trader positioning ahead of potential central bank rate adjustments rather than pure panic over war news. Ultimately, sustained high oil prices threaten global consumer spending power, while tech sector resilience remains uncertain until these key corporate results are released later today. Thanks for watching Market Pulse Daily.